Welcome, everyone. So, Japan's real estate market, it's been sending some really confusing signals lately. The latest data we have from October 2025 shows growth, but that headline number, well, it's hiding a massive, and I mean massive, fundamental shift that's happening just beneath the surface. So today, let's break down what's really going on. You know, if you only read the headlines, you'd think the entire market is on a one-way trip straight up. But that national average is incredibly misleading. Seriously, it's hiding a really complex reality that for investors presents both some huge risks and some pretty massive opportunities. Okay, so if there's one single concept you need to grasp right now, it's polarization, or as it's called in Japanese, nikyoku. The market isn't moving as one big cohesive unit anymore. Instead, it's dramatically splitting apart, kind of like a tectonic shift, right along two very distinct fault lines. And here they are. These are the two splits we're going to look at. First, you've got a split between asset types. We're talking condominiums versus detached houses. And second, there's a geographical split, a really widening gap between the Tokyo metropolitan area and, well, pretty much the rest of the country. Understanding these two divergences is absolutely the key to navigating this entire market right now. All right, let's dive into that first split, condos versus houses. Because what's happening is that the condo market is absolutely booming, but that boom is directly causing an explosion of activity in the detached home market. And here's how that works. So get this, condominium prices nationwide are up a staggering 11% year over year. And that marks the 12th straight month of increases. Now on the surface, that sounds like a red hot market, right? But all this strength, it really comes at a cost. And here is that cost. With prices so incredibly high, affordability is becoming a major issue. Buyers are getting squeezed, and as the data shows, they're being forced to make some pretty serious compromises just to get a foot on the property ladder. The data really tells the story here. I mean, look at this. Even as prices are going up, the average size of a condo that gets purchased has actually decreased by 2%. And at the same time, the average age of these buildings has increased by over 5%. The takeaway is just undeniable. People are paying more for less. It's as simple as that. So you have to ask the question, right? If buyers are getting priced out or they're just not willing to settle for these smaller, older condos, where does all of that demand, and more importantly, all of that money go? It flows right here. We are seeing an absolutely incredible 41% surge in the number of detached house transactions. This is not a small uptick, folks. This is a massive wave of buyers flooding into what they see as a more affordable and, potentially undervalued alternative. Let me put it another way. We are literally witnessing a historic level of capital moving from one asset class to another. And this is everybody. It's families looking for a home, and it's savvy investors who are hunting for that next growth area. They're all piling into detached houses because, frankly, condos have just gotten too expensive for a lot of people. Okay, now let's look at our second big divergence. Because it's not just about what you buy anymore, it's about where. And the geographical split that we're seeing is every bit as dramatic. Wow. I mean, the contrast here is just stark. In the Tokyo metropolitan area, you see condo prices soaring by nearly 12%. But then you look at the Chubu region, which includes major cities like Nagoya, prices have actually fallen by over 10%. These are two completely different markets operating in the exact same country. It's night and day. Let's break this down a little more. So, Tokyo's demand is described as very solid. No surprise there. But the drop in Chubu, that's not just a blip. It's an accelerating trend that investors in that area really need to watch carefully. And then you have a wild card like North Kanto, showing this huge but volatile increase. That's almost certainly a spillover effect from buyers hunting for affordability just outside of Tokyo proper. So the crucial point here is that the national average is just deeply misleading. The reality is that Tokyo's incredible strength is masking weakness everywhere else. It's pulling up the average while other regions are flat or even falling off a cliff. In this market, location is absolutely everything. So what does all this actually mean for you as an investor? Let's take this whole polarization concept and distill it into a clear, actionable playbook. What do you do with this information? Okay, we can really break this down into two core strategies, and it just depends on your position. There's one for those of you who currently own property in Tokyo, and there's another for those who are out there looking for the next big opportunity. All right, first, if you own a condo in the Tokyo area, the data suggests you are in a prime position. With prices this high and growth rates maybe starting to slow down a bit, that price ceiling could be approaching. This is a classic opportunity to sell into strength, take your chips off the table, and lock in those capital gains. Now, for the buyers out there, the opportunity is on the other side of this split. Detached houses are where all that demand is flowing, but here's the key: prices haven't surged yet. That massive transaction volume we saw, that's a powerful leading indicator. Searching for undervalued detached homes, maybe in Tokyo's suburbs or in key regional cities, that could be the winning strategy for capturing the next wave of growth. So, we end with this really clear picture. Japan's real estate market isn't a single rising tide that's lifting all boats. No, it's a set of powerful, diverging waves. You have the condo wave, which may be cresting, and you have the detached house wave, which looks like it's just beginning to build. The only question left for you as an investor is, which one will you ride?